Welcome back to The Price of Business. I'm your host, Kevin Price, talking about you and your business. Delighted to have on Marty Okner. He's a regular contributor on The Price of Business. And his organization, ACG New York, they are really keeping the pulse, if you will, of mid-market companies. And Marty comes on and talks about what's happening in mid-market companies nationwide. I say that there's a lot of literature out there about the Fortune 500 and enterprise-level companies, and a lot of literature around the romantic small businesses, but not so much about the very important mid-market ones, which is why we get Marty on. And Marty, also, we need to get your company website and information.
Sure. My company is SHM Corporate Navigators, and my website is shmcnglobal.com. And what we do at SHM Corporate Navigators is we help mid-market companies prepare themselves for a sale or capital raise.
Very good. Introduce us to your guest today.
Sure. It's my great pleasure, Kevin, and thanks so much. Always a pleasure to be on the show to introduce Richard Baum, who's a fellow ACG New York member and board member of ACG New York. And Richard is with a firm called Consumer Growth Partners. Welcome to the show today, Richard.
Well, thanks, Marty. It's a pleasure to be there.
Great.
Richard, we're glad to have you on. Kind of give us your elevator speech to get us started.
Sure. So my firm is Consumer Growth Partners. We are a private equity firm known in the trade as an independent sponsor. We work exclusively with companies that are in the retail, branded consumer products, and restaurant sectors. We focus on middle market companies with 2 to 8 million of EBITDA. And we have two parts to our business. One is a buyout part where we invest in these companies, and the other is an advisory part where we work with what we call good to great companies to help them get prepared and then actually work with them to raise the capital for a transaction.
Very good. Marty?
Great. So, Richard, what makes your firm partially unique in addition to your advisory component, which is very similar to my firm's service offering, you also are an independent sponsor form of private equity. So can you tell us a little bit about what an independent sponsor is and what that means to a mid-market company?
Sure. So an independent sponsor is if you think of a typical private equity fund where they go out and raise several $100 million of capital, which they then deploy into a number of transactions and investments, we're exactly the opposite. We will go out and find an interesting company that we want to invest in, and then we will circle up the appropriate capital that's required, and we have many investor relationships that we can go to for any of our deals. But in each of our transactions, we are likely to have a different investor or investor profile.
Interesting. So tell us exactly about the state of your business and the businesses you work with today in 2015.
So today we have, so in our portfolio, we have made a total of 7 investments. We have had successful exits in about half of those. Today our portfolio consists of 4 companies, one of which is a family, a chain of family footwear stores called Shoe Sensation. We've got a winery in Napa called B Cellars. We've got a company that makes very technical apparel for the military called Wild Things, and the company that manufactures sonic toothbrushes that are primarily for travel purposes called BioLife. We've got a couple of advisory clients. One's called Harris, and Harris sells fine jewelry to military enlistees.
Very good. Marty?
Great. So, Richard, what are the common things that you see, with mid-market companies today in your portfolio? Certainly there's been a lot of public press about it being very much a seller's market. Yet you've just listed a pretty robust portfolio of some diverse and interesting companies. How would you describe, the state of the market today in terms of finding companies to buy?
Well, the scarce commodity in private equity is always the good deal. We are finding that there's still very steady deal flow for companies that are interested in raising outside capital. I think the one thing that seems to be different this year is that with the frothy stock market, that translates into pretty high multiples for a lot of the companies that are in the middle market. So this is a year where it's a seller's market. There's lots of companies who are trying to exit, take advantage of the fact that you're going to get really good pricing this year. That said, we remain pretty disciplined about the kinds of companies that we look for in our investment criteria. Not much different from other firms that are looking for, great concepts, a core management team, profitable companies with lots of growth opportunities.
Very good. By the way, give us your website real quick.
So our website, which describes all of our companies as well as what we do and my partners, is www.consumergrowth.com.
Very good. Go ahead, Marty.
Great. So, Richard, one of the things you mentioned is core management team. There's a lot of private equity firms out there looking for companies with strong management and great growth trajectories. Can you talk a little bit about why you look for management teams that are poor but really have an interesting concept in their brand?
So we use the term core because we are not at all adverse to bringing in a new CEO into a company. In fact, we feel that one of our advantages is that we've got a very deep network of potential C-suite executives. About half of the companies that we have invested in, we bought from the founder, owner, or the family owner, who may have built up the business over 20 or 30 years and are now ready to exit the business. And so we are very interested in those companies because we like to bring a CEO that's got a lot of credibility in the industry. And the missing link often in some of these companies is the fact that they're great concepts, but there's nobody to lead the company from where it is to the next level. And that's one thing that we bring that really makes us somewhat unique certainly among private equity firms as well as independent sponsors.
Got a couple of minutes left, Marty. Why don't you wrap it up for us?
Sure thing, Kevin. Always a pleasure. And Richard, just we want to touch on some of your exits in terms of where they typically go once you hold them.
Sure. So we have had we have had a couple of really good exits. We sold our Western wear retailer 2 years ago. It was called Baskins. We sold the company to a larger Western wear retailer called Boot Barn, which was owned by a private equity firm, and the private equity firm subsequently took that company public under Boot Barn, and it was very successful exit for us, and just a terrific outcome for Freeman Spogli, which is the parent. We have also exited an upscale direct marketer of women's apparel and accessories called Peruvian Connection. And we are in the market now with Shoe Sensation, which was the first company that I mentioned in our portfolio, our first investment, a chain of family footwear stores, and we expect that that transaction will be completed within the next month.
Great.
Very good. All right. Websites one last time. Marty, give us yours real quick. I've already given our guests.
Sure thing. So if you'd like to learn more about the Association for Corporate Growth, you can log on to acgnyc.org or SHM Corporate Navigators, shmcnglobal.com.
All right. Thanks to both of you, gentlemen.
Thank you, Kevin. Great. Have a great weekend.
Thank you, Kevin.
All right. When we come back tomorrow, we're going to have much more for you. I do want to remind you, best content here does continue 24/7 over there at usdailyreach.com and pricebusiness.com. Have a great day. Spend it wisely right here on this station.